Chit Chat Stocks. This is our weekly power hour. I am one of your hosts, Ryan Henderson, and I am joined, as always, by the one and only Brett Schaefer. On these episodes, we talk all things financial markets, anything that's going on in the world of investing, anything that's on our minds, and stocks that are piquing our interest. And this week, we've got a lot of news. Um, I think the bubble, there are signs of excess showing up again throughout the market. Last week, we had the sort of a funny meme coin. And then this week there are some speculation around a once defunct energy company, probably one of the most famous bankruptcies of all time, trying to get back into the world of well, I guess meme coins. But we're going to talk about that in a second. I guess Brett, how are you this morning? Earnings season is basically over. Salesforce reported yesterday, but it's kind of lighter on the news. I guess how is everything for you in the world of finance?
It's going well. Been looking at some Mexican companies. Lots of interesting stuff down there. Lots of stuff I think I'm going to cover on the podcast. Can't do it, I don't think, every month. I think people will get tired of those companies after a while. But, railroads, airport companies, fast food franchisors. I've been looking at that a lot lately as most of my earnings have been done. So they were done in the last few weeks. But yeah, excited to talk today. I think we have solved the internet issue. Uh, I can't really tell on my end, but people in the comments can let us know. I guess listeners of the podcast can't really tell, but I think we have a much stronger connection now, and hopefully that'll continue going forward because we want the best show as possible for the listeners.
Yeah, looks good to me so far. And for anyone that watches these shows, you might have noticed that I have kind of chaotic background here. I'm in between places at the moment. I am moving, so saying goodbye to the Pacific Northwest for a little. Not that anyone really cares, but if you watch, you might notice a couple different backgrounds. Before we get to this week's topics and Enron coin, if that is the meme coin they're going with, I want to talk about our friends at Public. Heads up, folks. Interest rates are falling, but you can still lock in a 6% or higher yield with a bond account at public.com. It's a pretty big deal because when rates drop, so can the interest you earn on your investment. A bond account allows you to lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds. So while other people are watching their returns shrink, you can sit back with regular interest payments, but you might want to act fast because your yield is not locked in until you invest. The good news, it only takes a couple of minutes to sign up at public.com. Lock in a 6% or higher yield with a bond account only at public.com/chit chat stocks. Where do we want to start, Brett? Enron coin?
Let's kick things off with something that will entice the listeners. Enron coin sounds good to me. What I guess you were the one that researched this, so I'll kick it off with a question. What the hell was this?
Uh, Researching is a loose term here. I saw a tweet, just like everyone else saw a tweet. Enron, which I didn't even know they had like an account. I didn't know they had anything left. Maybe someone bought Enron. I don't know. Bought whatever the rights were to the name. Apparently, they still got a website. They still got a Twitter account. They posted a like this kind of weird, vague, strange video that was just like snapshots of the world and energy and like just this like people being happy and like I guess also trying to encapsulate the energy crisis, I guess. And they said, "We're back. Can we talk?" Question mark. Um, I believe that's what it said. Anyways, I think it said, "We're back. Can we talk?" Let me double check that. But the basically the whole I guess they're trying to yeah, it says, "We're back. Can we talk?" Um, they put out a press release that says Enron Corporation announces relaunch with a vision to solve global energy crisis. For those of you that don't know what Enron is, I recommend there was a really good book written on it. There's also documentaries written about it. Basically, one of the highest profile bankruptcies of all time. A company that everyone thought was like a staple in the energy industry. I believe it was at one point one of the biggest companies in the world. Anyways, so they post this press release, and basically the moral of the story is that they teased some sort of token. like some sort of crypto token, and said like,
Shocking.
yeah, okay. So here's what it says: Enron announces relaunch with a vision to solve global energy crisis. And then it says key pillars of Enron's vision: adaptation as strength, leadership by example, which is all the irony in the world, uh, forgiveness and progress. Well, you're going to need a lot of forgiveness, that's for sure. For permissionless innovation, says decentralized technology is advancing, and we will, of course, have a role to play in its future and solving the energy crisis. So basically, they're going to launch some meme coin and hope to come back to relevance. I hope no one ever talks about this again. And that's the end of the story. If we're going to meme something, let's not meme this. Like, can we just let this die?
Yeah, let's see. It says about Enron Corporation. In 2024, Enron begins a new chapter dedicated to solving the world's energy challenges with innovations, adaptability, and a commitment to a brighter future. Yeah, this smells like a pumping up crypto mumbo jumbo. And we're getting a lot of that lately as it's getting increasingly clear. And we're not going to go on rants about this again. We want to talk about other stuff. We can't just be talking doom or stuff about a market bubble, but it seems like you can do fraud all you want in the crypto space and in the stock and equity and normal financial market space. There's actually rules. So, not surprising.
Yeah. Yeah, I hope this goes absolutely nowhere. And who is even doing this? Like, obviously the executive team from what was his name that like cursed out the analyst on the conference call. They're
Kenneth
not
Lay
there.
and Skilling. Kenneth Lay and Jeffrey Skilling, I think were the names. Those are the two big guys.
I I believe they've both since passed. So,
No,
so
Skilling, I think is still Skilling went to jail. I think he's actually still alive and he does seminars about how to identify fraud. So it's kind of a, go to prison.
comeback reform
Uh
kind of thing.
yeah, like all right, talk to a serial killer about how to find them. Yeah, he seems to be alive, but Kenneth Lay, I think, died right away. He was pretty old.
Okay. Well, yeah, I'm curious who is even left to like do this, promote this, push this press release. Like who? There's no company left, right? Am I?
No, no, I mean it's completely it's not the company. It's had nothing to do with Enron. Uh it's going to be the same people that probably bought or hacked into Roaring Kitty's account. They're just doing it to pump and dump. There's
Okay.
nothing about it. There's nothing else there.
All right, we'll leave it there. Yeah, we've got a couple messages here in the comments. Pat Gelsinger, the now former Intel CEO, is
Right?
retiring. Um, Thoughts on Black Friday spending? Consumer seems to be doing okay. Yeah, looks like it. I will say every single year you see something about Amazon had their biggest Black Friday sale ever, and it's like, yeah, it's online commerce. It should grow a little bit every year, I imagine. And then some other topics. The United Healthcare, I think the insurance CEO passed away this morning, like out of
He was
total surprise.
assassinated.
Yeah,
Yeah.
killed.
That I mean, we got no comment on that.
No, sad. Um,
Yeah, obviously sad.
is United Healthcare Insurance its own company?
Yeah, it's the largest health insurer in the United States. That's the extent of what I know about them. We had one question though, and yeah, I think we can hit maybe Pat Gelsinger. Seems like he got the football coach. I have decided to be relieved of my duties. Fired, but they say he actually decided to retire. There's one question on Alsea. And we can hit that later. I mean, what do you want to hit first? There's a lot of stuff here.
I well, I do want to talk about my small cap of the week because I find it pretty interesting. But let's start with I made this thread this week and it might surprise you a little bit. So it's the 8 fastest growing software companies of the last 5 years that are profitable. And by profitable, I just mean they turned the corner to profitability, so they're marginally profitable. Do you want me to go through these and see if any intrigue you at all?
Sure, sure. Go
Okay,
right ahead.
so first of all, I got one of these wrong. So I will say that I was looking at the wrong quarter. They had a quarter of profitability. They came back. But number one, the fastest growing software company of the last 5 years that is also profitable is CrowdStrike. Um, the Yeah, everyone knows them for breaking the internet. I will say, last week we talked about this briefly because they had earnings, and there was this big discrepancy between remaining performance obligations and revenue. And I read through the conference call, and basically they had exactly what we thought: one-time discounts, and long-term locked in some one-time long-term deals to kind of make their customers feel better. And they only saw like their gross retention dropped by 50 basis points on their Falcon product. So they broke the internet and lost less than 1% of their revenue. So
Not bad, not
that
bad.
is pretty impressive.
Yeah.
Anyways, so they're the fastest growing, 52% annual growth rate over the last 5 years. Number two, this is the one I got wrong. Zscaler, another cloud security company. They've grown 47.5%. They're kind of on the cusp of profitability, but not showing it on a recurring basis. The other thing, okay, number three here, Datadog. How come every new age cybersecurity company just seems to have like absurd revenue growth?
I don't
Everyone I
know.
look at.
That's a good question, Ryan. And yeah, there's a lot of companies out there that seem to be growing extremely quickly, and I have no idea why I should like the stock. It just I'm looking at the rest of your list here without spoiling it, and perhaps there's one company on here that I could get somewhat of a thesis on, but that one's trading at like 45 times sales.
Yeah. So I guess number three was Datadog. Number four, App11, 36% revenue CAGR over the last 5 years. Outrageous valuation because revenue has been accelerating lately. Five, Smartsheet, which I think is like workflow automation software for enterprises. It's grown quickly, but I just think there's like a million of these things. I can't help but think they're just like paying for marketing dollars to steal customers from one another, and it's not going to be and neither one of them or any of them are going to be uber profitable. Um, Number six, people might some people might love this one. Palantir Technologies, one of the fastest growing and profitable software companies the last 5 years. Seven and eight, Double Verify and ServiceNow. Here's what I kind of think looking at these. And Double Verify, for what it's worth, is kind of interesting. They help advertisers and publishers detect fraud, monitor viewability. So they basically help if you're a brand and you're advertising on Facebook or whatever, and you want to make sure that you're not put in like I don't know, the wrong channels, like stuff that just does not resonate with your brand. Same with like TV channels, that kind of thing. Double Verify helps you do that and just make sure that you're showing up in the right areas. Sort of a brand safety advertising tech. Um, Kind of interesting, smaller company, good revenue growth. But I look at these and I think all these have grown really quickly. ServiceNow, it's okay. It trades at sort of a ridiculous valuation or a valuation I can't really get around. And I just think I would rather have a company that gets a worse multiple but has a history of growing 10 to 15% than this insane growth at insane prices just because it's so hard for me to know what's coming next. And if there is any sort of collapse in growth or even a drop in growth, you're the stock's going to get crushed.
I agree. Yeah, and all these companies, except for maybe Palantir, like I mentioned, I can sort of understand what they do, but in reality, I can't be a true expert on it. Almost all of these companies, I just can't get a grasp on what the mode is, what the customer value proposition is, why it's not replicable. It's just not the field I want to play in. But if you took a basket of these over the last decade, you've probably done quite well. I mean, think of one that I guess I owned maybe briefly back in the day when I was first starting and kind of just doing nonsense stuff, which was MongoDB. And I saw that they're like, oh, we're doing modern databases in the cloud. All right, great. I'll buy the stock. I mean, that growth has been phenomenal. I'm not sure how they've done recently, but I have no idea why people are joining them. Oh, yeah. Wow. 160% over the last 5 years, 1,000% all time. Yeah. Pretty good returns since their IPO in 2017. And that's just really because they've had, durable double-digit revenue growth that's been way higher than I would have expected.
It's so funny looking back at, I guess, who I was and maybe who we were as investors 5 years ago, and it was just seemed so simple. I just say, "Wow, look at the revenue growth," and yeah, I think they could get to profitability. And today I'd be like, "Ah, look at that naive kid," but his that version of me's returns would have crushed my current returns. So,
Yeah,
uh,
buying Shopify, stuff like that.
yeah,
Yeah. Do any of these interest you? Do you have any
no,
yeah, it's
yeah,
just so
no.
hard to analyze.
And once you've turned the corner to profitability, like if these are the companies that have successfully turned the corner, you get rewarded by shareholders. At least they have been in this current environment, especially if they've been able to keep up solid revenue growth. So these are leaders for the most part in their niche. I- and it just makes it a valuation that's hard for me to justify. So, and it's even an expensive valuation relative to their own history. So a lot of these are trading at uh, premium multiples relative to their last few year valuations. So I think, yeah, I'm not intrigued by a whole lot of them, but I sometimes wish I had like that 2019 approach that I used to have of, ooh, look at that pretty revenue chart.
Yeah,
Let's buy a
exactly.
basket.
Sometimes, hey, sometimes that can work, and that is part of the Motley Fool strategy, but not talking about that today. Let's talk Alsea, Ryan. Had a little tweet on this. People seem pretty interested in it. Quite a couple people are asking to talk about it. Just as a reference for anyone that doesn't know what Alsea is, that's the name can't really mean anything. We've covered them before on the show. If anyone wants to go look in our catalog, we'll have deeper discussions on them. But they operate restaurants in Latin America and Europe, and they operate fast food, fast casual, and family restaurants for Domino's, Starbucks, Burger King, Chili's, P.F. Chang's, Italiana's, the Cheesecake Factory, Vips, and a few others like TJ Fridays. So essentially in Mexico, other countries in Latin America, and a little bit of Europe, mainly Mexico, Spain, Argentina, Colombia, Brazil, I think a bit, and Uruguay. Stock, Ryan, it's down 45% from all-time highs. PE is down to 12.5. EV to EBIT is down to 10. There's still a lot of room to grow these brands in Latin America. 10-year revenue growth rate of 15%. Um, Earnings per share growth, I'm trying to just kind of come up with numbers really quickly here. 16% diluted earnings per share growth over the last 10 years. I'm seeing, let's see, dividend yield. Let's try to load that up here. Stock seems fairly cheap to me. People are asking why it's down. I think it's probably just the fallout from, at least recently, it's the fallout from the election and then the peso going down, maybe. I'm not sure. I honestly have no clue why the stock is down. I saw our what I call our Latin America correspondent, Ian Bezek, tweet in a response to my posting some FinChat charts about it that he sold when it was at 80, thought it was a good buy at 60, and was surprised to see it go down to 40. So, hey, maybe there's something interesting here. Let me try to pull up the dividend yield just to illustrate how potentially it could be a nice dividend grower. We'll get FinChat to load here. I think it's right around 5.
It's yeah,
Or no, it's only 2.6%. But what are your thoughts? Does this interest you at all?
yeah. I think there's a lot that's interesting in Mexico in general. I will say, having owned some Mexican equities in the past, the one frustration that I remember having is, and if you're tucking this away in your portfolio to have for 5 to 10 years, doesn't matter. But if you're constantly looking and you're curious, I remember being frustrated by not knowing why something was going down. Like there'd be some sort of a change, and I'd be like, "Is this related to the tariffs? Is there macro news? Is there like an earthquake in Mexico I haven't heard about?" Like I
Yeah,
just
but
remember
do you know that for when your stocks are going down in general?
usually have some idea.
Yeah, but isn't
Like,
that just
I'm talking about
connecting?
big swings. You can
Sure.
usually figure it out, and it doesn't matter if, like I said, if it's long term, it shouldn't matter. It's almost always more noise than news, but I just remember, like, having to dig for it. I'm like, I'm looking up the ticker on Twitter, like, "What is happening?" And I'm just getting a whole bunch of meme coins, so yeah, it's no, I think this is attractive. We're gonna be doing our episode here on stocks to hide in during a potential market bubble. this is the kind of security I'd be looking at for that.
Yeah, I mean, I guess it does have what you might call a margin of safety, just because of that stock price and their durability with, being attached to the American brands, the durable revenue growth. I don't know if I would hide in this one compared to maybe some other things, but I could see it being put on the list.
I don't see how the currency's a headwind. If you've got
S-
you're
so
buying
it
in
would be the
peso, you're selling in
peso.
peso.
I mean, this is, I guess, I can't go through all. I don't know, have all the numbers in front of me, but the numbers I'm citing for the stock price are in pesos. So even in US dollars, given the peso has depreciated, your actual returns, if you've held over the last year, have been much worse. But they operate in countries outside of Mexico. So if those currencies are depreciating versus the US dollar, or excuse me, versus the Mexican peso, then that can hurt their growth. And well, I think they have pretty big exposure in Argentina, and well, that currency is depreciated a ton. But maybe part of the thesis is Argentina is on the road to recovery and is kind of, beat that hyperinflation. Fingers crossed.
Yeah. Yeah, I'm intrigued by this one. There's a basket of like 4 or 5 Mexican equities that I'd feel comfortable owning.
Yeah, and it's full disclosure, I do own, as of this moment, not Alsea, but I do own one of the Mexican airports with the ticker OMAB, OMAB, and the Mexican Stock Exchange, which I did a research report on last month. Now, I'm not doing a Mexican stock for this month's research report. I'm doing one that's in the cannabis space, which a lot of people have asked to do. And I think that'll be a fun one as well. But I'm going to name, just before we move on here, a couple of companies, Ryan. I'll let you choose what the next Mexican company I should research. I have three choices, actually four. One, the Pacifico Airports Group, which is, I think, Guadalajara, Cabo, and a couple others. The Northern Mexican Airport Group, which is kind of the industrial region up north, Alsea, or the Mexican Railroad, which is called like Grupo Mexico Transportes.
Yeah.
I can't say with the accent without the accent.
Uh, I would prefer the railroad just because we've looked at the other ones before.
All right, yeah, it does look fun, and maybe that's the manufacturing reshoring theme. You have the tariff headwind narrative right now that may or may not be implemented. You could potentially, and I haven't looked at this company in depth, so this is nowhere near anything of like my thoughts on the company. You could see a potential ability to climb the wall of worry, and I looked at it already. And dividend yield is, that can be dangerous if you look at it in isolation, but the dividend yield is 6.5%. So not bad if they can sustain that and grow it.
Yeah, the if you're getting a 6.5% dividend yield when the US Treasury yields at 4, I and you believe the company can grow, it seems like a no-brainer. Even with any sort of currency headwind, it would take an insane currency headwind to make that not pay off. So,
Yeah. And we don't need to go into that, but it's not going to be like an Argentina level one because of, at least related to the US dollar, just because Mexico and the United States have such a strong trade relationship. Someone says Alsea is my vote. Uh, maybe I think we're definitely going to try to cover. I'll say at least maybe in that list of stocks we're doing, because we've covered them before in an interview, and it seems one that is fairly attractive and interesting to take a look at given this drawdown. Let's move on to another topic though. Someone says South Korea martial law. I will say that was it's a coupon shareholder. That was an interesting wake up to read about, and luckily it's over. But that that seemed. That's all my only thoughts on that one. What about Intel, Ryan? Pat Gelsinger gone. Is this the bottom, or is there more pain ahead?
no. Is it ever the bottom? I mean, it's just feels like a revolving door. I remember, well, maybe there haven't been that many CEOs, but I remember when Pat Gelsinger came in, we thought, man, this is the right guy for the job. I think they're gonna be in good spot. He seems like he's doing all the right things. And then all of a sudden the business struggles. The It's sort of a Herculean task to turn this thing around. He can't do it on his own. He can't do it in general. And we're looking at it like this is a Pat Gelsinger problem, not an Intel problem. I think at this point, there are certain companies for me that aren't savable. Like, you could even have a great I think Boeing is like that. It's not I'm saying not savable, but I more so mean
The
it
stock.
is well,
The stock isn't
like,
savable.
it's such a big, complicated organization that for you to turn it around and make it compete with much more dynamic, fast-growing, younger companies that have not let bureaucracy slip into the company, um, it's just hard to walk that back. Once the bureaucracy is there, it's so hard to walk it back, which makes it all the more impressive that Meta was able to do it.
Yeah, I think, it's not the most fun thing in the world, but you probably have to lay off a bunch of people, which both Intel and Boeing are doing. You have to, and that is just a blunt force tool when you're a company of that large. It's just like, all right, we just have too many people. We're probably letting go of some good people, but it's just what we have to do, especially with how unprofitable we are at the moment. And then specifically with both of them, you probably have to break yourself up. You with Intel, and I'm stealing this directly from Stratechery with Ben Thompson had this idea, and he's been basically pushing Intel, and he has a lot more influence than us. He can probably like literally influence the company to make these changes. He says, split up the manufacturing from the software design. You have to become modern, and you can have Intel be one of the first customers of this new foundry. But you basically have to say, look, we're so far behind TSMC. We probably need $100 billion of investment, if not more. We talked to Amazon, Alphabet, Microsoft, who else? Apple, Nvidia, Advanced Micro Devices. I could go on. Maybe even ASML and some of the chip suppliers. They all invest money into this new company, and then we build up the new fabs and almost how ASML did it with their lithography tools and that I think it was multi-decade or maybe a 10, 15-year time horizon on building this new technology. That's probably the way I would do it, but that's going to take a lot of coordination, and I'm not sure they will.
Yeah, it seems too difficult for any one person to solve. Sorry that Pat Gelsinger, uh, it seems like you're getting pushed out or quote unquote retiring. But yeah, it's I don't know who's going to be able to walk in and solve it. Breaking it up sounds like it might be better, just because I think at least having some sort of smaller operations will help.
You
But
need outside customers where you're not like when
yeah,
Intel itself is the number one customer for your foundry, it just makes people, I think, disincentivized to go to you versus TSMC because you're not, sending orders to your competitor.
yeah, that's a good point. What do you think the odds are that that actually happens?
When push comes to shove, I think they're going to have to because similar to Boeing, they are what national security. America wants them to succeed, needs them to succeed. They have all these loans coming from the CHIPS Act. They have these new factories coming in Arizona and Ohio, I think, or maybe it's just Ohio, and I think Arizona is TSMC. Either way, a lot of factories in the United States. They don't want these to go to waste, and regardless of what the share price is going to do, the company is going to survive.
Yeah, it's I think it'll take a big activist to make the breakup happen, because this kind of reminds me. We were studying Bill Ackman a while back, and very very different operation. But Wendy's, way back when, used to own Tim Hortons, and Wendy's itself was kind of this bad operation, and Tim Hortons was kind of this gem in Canada. And it just made me realize that, like, if you're a manager there, if you're on the board of directors there, and you're on this big enterprise, you feel better as a part of the big enterprise. You probably get paid more as part of the big enterprise. You don't really want to lose that your job security. So there's all the reluctance in the world from existing management to be the one that pioneers that change. I think you probably need a big push from activists.
Yeah, and I brought it up here right now, Ryan. Market cap of $95 billion. Not crazy for an activist. I think someone could come in there and do something. Might have to be a team, but who knows? Maybe they could shake things up here.
Private equity could buy it.
Yeah, that would be.
That's what we
Uh,
need.
yeah, we're not private equity haters here, but I don't know if that's the right. method here, they probably need, similar to Boeing, they need engineers running the company and they need partners that understand what matters first, and that's the technology
Yeah.
and the safety. All right,
Do you want to talk
let's
about my
look at
small
other
cap of the
stuff.
week?
Yeah, let me try to make sure we get all the questions here first. Someone said Portillo stock pitch. I have nothing to say on that. I did, unfortunately, not win the stock pitch competition that was floating around the internet there, but you know, it's fine. It's not like it's not like it made or break my life. But I did post the full stock pitch since I didn't make it uh, to the Substack that we run, the newsletter, and the link is in the show notes there. So please go check that out. It seemed like people enjoyed that, whether or not they agree with this statement or not. And yeah, I think that's everything on the questions there. So yeah, why don't we hit small cap of the week, Ryan?
Okay. And shout out to, I believe the name is Cole Barcia on Twitter for recommending this one. We are talking this week's small cap of the week presented by Yellow Brick Investing. For those that don't know, I say this every episode, but we love Yellow Brick Investing here. It is one of the best places to get high quality stock pitches on the internet. Just go to joinyellowbrick.com, look up the ticker. I guarantee you're going to find a high quality write up on whatever company. Anyways, that is what I did. So Cole Barcia recommended PubMatic and went to join Yellowbrick, typed in PUBM ticker, found a bunch of write ups. And I actually realized we discussed this a long time ago. So went and checked some of my own notes as well. But Pub
Were we right or wrong? Did the stock do well or
I think it was just like I found just my research notes, so I didn't have any sort of take on it. But the stock has not done well relative to the IPO. Um, PubMatic, though, for anyone that doesn't know, which probably most people, since it's not a very household name, operates a sell side advertising platform that matches digital content creators with ad buyers. PubMatic sits between these two groups, the buyers and the sellers, and the company is focused on the sellers of advertising space and earns its revenue from them. So we are a seller of advertising space. They make their revenue from the content creators. I don't think they operate in podcasts, but nevertheless, other forms of content creators. The buyers, either direct advertisers or demand side platforms, which is like the Pubmatics of the advertiser side, can access the sell side platform, review seller ad space inventory available, and bid on and purchase space that best aligns with their goals. This is Pubmatic's basic business model. Basically, if you're a content creator, blogger, video maker, whatever, you can use Pubmatic to help generate more revenue. Here is a snapshot from Cole Barcia, who tagged us and said potential small cap of the week. He said, here's the 2024 financial snapshot. Revenue 294 million, EBITDA 91 million, SBC 39 million, so stock-based compensation. So a good amount of stock-based comp there. $140 million, more than $140 million in cash and no debt. That's nice. Growth of revenue and EBITDA above 10% in 2025 and beyond. Buys back $100 million a year in stock, led by three co-founders with a combined greater than 20% ownership, named an SSP leader. Okay, couple things here. Revenue reaccelerated. If we look at the revenue chart, which I'll actually just pull up here.
oh, I can pull it up.
Okay.
I actually got it loaded up right for you on FinChat.
Okay. So revenue reaccelerated along with really the advertising industry overall. So they're not like alone. There is going to be some cyclicality here. The other thing, and I'm not sure exactly what they acquired, they might have acquired maybe some smaller sell side platforms, but if you look at the operating income, the gap operating income, it's $10 million over the last 12 months. The EBITDA is 91 million, and the operating cash flow, I think, is around 84 million. So huge discrepancy. The majority of that is coming from A, stock-based compensation, B, amortization of intangibles, so or amortization and depreciation. I think they had a big acquisition. They're writing it off, or they're amortizing it over time, so that's going to hurt the gap financials. But cash flow, I would say cash flow minus SBC is kind of the metric to pay attention to here.
So
Um,
you're saying I have operating income up here. It's not that great. You're saying right now there's a temporary headwind on that on the gap figure.
yeah, from the amortization,
Interesting.
it
Okay.
seems I would go with free cash flow minus stock-based comp as sort of your earnings metric. The thing that I do find intriguing here is They earned $84 million in operating cash flow last 12 months. They spent $83 million on buybacks. So they're spending all the cash flow on buybacks. They've got more than $100 million in net cash on the balance sheet. It's an $800 million market cap. So they're basically buying back 10% of their shares every year at this
Yeah.
pace. And it
Not
seems,
net, not net though. Net's
you
like
know,
5, right?
yeah. The stock-based compensation is going to offset that a little bit. Probably, I'd say 40% of the buyback spend will be
Yeah.
pushed back through stock-based comp. But good reduction in shares if they can maintain this, and it's not like they're doing this one-time temporary buyback. If they're spending 83 million and they're earning 83 million, it's doable. I like this. You got a potential share cannibal here with good actual growth. I would probably need to take a deeper look at their just end markets and how susceptible they might be to an advertising slowdown
And
because
competitors. Yeah.
yeah, competitors too. It is a competitive space. I like these businesses. I think they're fairly easy to understand, and advertising is cyclical to some degree, but you can for a supply side platform like this, people will slow their ad spending, but when you slow your ad spending, the average price for advertisements goes down, and it's kind of this reinforcing cycle where you've got lower ad rates, you want to spend more because you're potentially getting a more attractive ROI or return on ad spend, I should say. Um, so it's not quite as cyclical as some other spaces or other industries. We even saw this coming out of COVID. It slowed down, but it didn't like come to a grinding halt. So yeah, this intrigues me. Basically 11 times EV to free cash flow. It's interesting.
Yeah, I like the balance sheet there too. I would I just wish given their cash flows needs, I wish they would just stop the SBC and the fact that they would still have positive cash flow and you could just I don't know. I just don't like that extremely heavy SBC even if they are still generating positive profitability. It's yeah, definitely interesting. I think you see a lot, and I get a little bit confused in the space. I haven't looked at it in a while, but the fact that someone like a Netflix or someone like a Spotify still needs to turn to these providers indicates that you can't really do it alone unless you're the Googles or the Facebooks of the world. So there's definitely a value here. And given the fact that big brands want to get all through to the actual valuable parts of the internet, where, for example, I'm sure, and I'm not sure PubMatic works with Spotify, but they have their new automated platform for podcast advertising. They're trying to grow that. Doing it by themselves at such a small scale at the start probably doesn't work. You need to go to, and I think on maybe them it would be the DSPs. I honestly get the terms mixed up, but whatever. In the value chain, they're still working with these third party uh, providers, and seems like they're here to stay.
Yeah, I mean, there's a place for these supply side and demand side platforms in the advertising market. The walled gardens can do they take up the majority of advertising spend, especially digitally, but it's really like just a relationships game. If if I'm an advertiser and I want to find, or sorry, if I'm a creator and I want to find a bunch of uh, advertisers, I'm good at creating. I'm not a salesman, potentially. If I can go to the supply side, they can offer up my inventory to their DSP partners, and they already have all these relationships with potential advertisers where you're not getting as much revenue potentially, or it's not as high margin, or maybe there's a fee off the top, but it's guaranteed revenue and you can focus on creating. So I do think there's a world where these just continue to exist. I don't think they're going to be pushed out. I like these. If you can find them at the right price and they seem like they have durability, which it looks like PubMatic does, I think they could be a good investment.
Yeah. Do you know why revenue growth has slowed down?
Well, I would
That's something to
assume that
concern.
part of the revenue growth slowdown in 2022 was just the advertising market overall.
Okay. So maybe
We
we're
kind
just
of experienced
digesting
that
that still.
ourselves.
Yeah.
Yeah. Remember in 2022, there was just so many advertisers that pulled back.
And I
Um,
thought that meant that the whole world economy was in a recession because digital advertising spend was down slightly. I remember those days. Yeah.
yeah, so yeah, I think I would assume that was part of it, but probably worth double checking that. It started accelerating again. I mean, it looks like it's up 10%, 15% over the last year. So certainly moving in the right direction. I would be a little concerned if some of that was inorganic.
Mhm.
You don't want them like acquiring their way to revenue growth. But I remember reading in that thread that the guy sent me, that Cole sent me, there was good core advertising growth as well. But there's also political ads as well that might have helped temporarily. Um, you're not going to see those as much moving forward. But yeah, I would say that's of the small cap of the weeks that we've done, the 25 we've done now. That's probably in the top 5.
All right. Wow. Interesting. Interesting for sure. Maybe a one to put on the research list for 2025. All right. I guess let's move on here. But before we do, Ryan, do you want to talk about some more of our sponsors?
Yeah, couple things to note. We have been using FinChat throughout this entire episode. We use it every day. If you're interested, you want a research platform for yourself, finchat.io/chitchat will get you 15% off any of the paid plans, but there's also a 2-week free pro trial. So if you want to check it out for yourself, go ahead and just sign up. Um, but also, another word from our friends at Public. Heads up, folks, interest rates are falling, but you can still lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds on public.com. You might want to act fast because your yield is not locked in until the time of purchase. Lock in a 6% or higher yield with a bond account only at public.com/chit chat stocks.
Yeah,
Well,
special shout out to the people that took advantage of the FinChat Black Friday sale.
there
A
were a
lot of
lot of you.
demand there with our link, and we really appreciate it. But also thanks to the rest of our sponsors, Public and Yellow Brick. They help this show keep going every week. Okay, you want to talk Amazon Supercomputer, Ryan?
Sure.
Yeah, have you heard about
My
this?
expertise.
Your expertise on yeah, we do have a maybe as a tease, we did bring on I'll call it maybe an AI and cloud expert, especially in the startup space, and we're going to be bringing him on next week or maybe the week after for an interview, and that's going to be a really fun one. I thought there was maybe a lot to learn in that interview, but also I learned that I don't know much about the AI startup space, and it makes me wary about investing.
Yeah, I know we're talking to an expert when every question I ask, I'm like, gosh, I really hope this is not about to be a really stupid question. Uh,
Yeah, that's true.
but
That's
you
true,
know,
but
means
hopefully
means we're driving value for the listeners.
yes, exactly, exactly. I think listeners will find a lot of value out of that. So, here's my news. Amazon's new supercomputer, they had the annual AWS big conference. I think that's in Las Vegas. I think honestly one of my roommates is there right now, but I don't know for sure. The company announced a supercomputer that will have hundreds of thousands of its homegrown Trainium chips in them. Now, if that's not good for a stock pump, I mean, come on. In 2024, that's booming you up at least 2-3%. Here are some quotes from the Wall Street Journal. Quote, the chip cluster will be used by the AI startup Anthropic, in which the retail and cloud computing giant recently invested an additional $4 billion. Um, quote, a key part of Amazon's AI strategy is to update its custom silicon so that it can not only bring down the cost of AI for its business customers, but also give the company more control over its supply chain. That also could make AWS less reliant on NVIDIA, one of its closest partners, whose GPUs the company makes available for customers to rent on its cloud platform. Last quote. SEO Kant, co-founder and chief technology officer of the AI coding startup Poolside, said it is getting roughly 40% price savings compared with running its AI models on NVIDIA's GPUs. But a downside is that the startup needs to spend more of its engineers' time to get Amazon's associated chip software to work. Also saw a note that Apple is going to be one of their newest chip customers, which I didn't really understand. Don't know if that's like AWS contracts or something along the lines. I think it may be the biggest takeaway I had there is Apple is so far behind in in the AI stuff right now. I know they're good with chips, but that's more of the personal computing ones. Ryan, what are your thoughts here? NVIDIA, is it toast? Are we are we done here? I thought it was interesting they said that it's way harder to work with these Amazon chips, but the price savings are so much that we're switching to them from NVIDIA.
Yeah, it seems like that's I would guess that's probably any chip provider that's trying to compete with NVIDIA. It's the sales pitch for all of them. Like it's it's not going to save you time, but it will save you money. And that seems to be the case for Amazon here. It sounds good. I will be honest. A lot of these words,
Yeah,
it's a lot of mumbo jumbo that I don't quite follow, but it's hard not to be optimistic on the on the hyperscalers. Like
yeah.
it's in our whole discussion that we had with Sean yesterday, and I'm not sure when it'll come out, but um, it, there's just it's like all the money is going, even though all the big tech companies are the ones that are spending the most on this stuff. It's all funneling back into like compute compute costs. So it
Yeah.
ends up going to the AWS of the world. Yeah, if they can have 40% real price savings and they can offer it, and maybe they can make the software a little easier over time, it would potentially hurt NVIDIA. Yeah, but I would not be ready to say this is an NVIDIA killer.
I think it's something that should be the number one concern if you're an NVIDIA shareholder is tracking this type of stuff because these are their biggest customers and they will continue to be their biggest customers. And if they replace it with their own, that's clearly like that's one chip that isn't an NVIDIA chip. Yeah, and you mentioned the buzzwords here. Amazon's calling it a quote ultra cluster. Don't I kind of like that. It's not a big cluster. It's not a supercomputer. It's an ultra cluster of GPUs for our AI, whatever it is, which I think is fun.
I love when
Yeah,
people say supercomputer. Like just that word, everyone's like, "Whoa, okay, that's
oh
good
yeah,
for yeah." Like you said, good for a 2 percentage point bump. Yeah, no, heard. Seems like good news. I just find it a little bit of a bummer that so much of Microsoft and increasingly Google, but Microsoft, Amazon for sure, like so much of the business is heading towards this world that I have zero like knowledge in,
yeah. That's
like the
why I get
development
nervous
side.
about. Yeah, I agree with you. Where buying, say, Amazon's stock today, it, we were very bullish on them at the beginning of 2023, the end of 2022. And that is because I thought I understood the retail business quite well, and I thought it could be much more profitable than people thought. But today, you're almost making a bet that I just think a lot of this optimism around AI is priced in, and I have no idea what to think about it.
Yeah, certainly is. And we're seeing that all over the place with valuations. All right, let's shift gears a little bit. Our friends, no, I don't know why I'd call them my friends. Supermicrocomputer
Yeah.
did something quite interesting this week.
Well,
They quelled all concerns with their
yeah, just
large
like
committee.
yeah, the independent committee came up with a decision. I thought it was kind of like a old Soviet Union announcement from Joseph Stalin, but maybe that's a bit harsh. All right, here are the notes and here's the update because I know we've been talking about this company really throughout 2024. SMCI, who I'll use as their ticker here, their audit review from an independent committee, which began on August 30th, was concluded this week and found no wrongdoing. Quote, among its findings, the independent special committee determined that the resignation of the company's former registered public accounting firm, Ernst& Young, and the conclusion Ernst& Young stated in its resignation letter were not supported by the facts examined in the review. The special committee's interim findings reported to Ernst& Young on October 2nd, 2024 of the special committee's final findings. Yeah, it's a bunch of lawyers speak to try to confuse you. Right? I mean, that's just crazy. Like the amount of nonsense in those sentences is crazy. Second quote. The special committee is comprised of Susie Giordano, an independent member of Supermicrocomputer's board of directors. Mrs. Giordano, an experienced attorney, joined the board in August 2024 specifically to lead the special committee's efforts to review the matters outlined above, independent from any existing directors. You read that right, Ryan. The special committee was one person, and they were hired in August of this year. So the committee was one person. She joined the board this August, and it took her around 3 months to conclude from this very complicated business, as we could tell from that Hindenburg report, that nothing was wrong.
A and sh
The giant auditor, one of the big four auditors said, we can't figure this out, but she can. Susie Giordano can. And she received a $250,000 stock option grant when she joined the company. I think that's doing nicely today after her findings. Is Supermicrocomputer vindicated here, or what's going on?
Oh, certainly. Certainly they are. Yeah. No,
Yeah,
it
we're
first
burning
of
the
all,
shorts.
a one-person committee is an oxymoron. There's no such thing. You cannot have a committee of one person. Isn't a committee, like, meant to be a group?
I don't know. There might be some college football fans that would like their athletic director to be a one-person playoff committee. This committee is probably the only committee with less integrity than that one, but that's a whole different topic.
Yeah, the other thing here is, so their massive auditor that gets paid $5 million a year, uh, couldn't solve it. But you brought in this one person who has a separate full-time day job. Let it let that be said. Uh, she has another day job. Who came
As
in
a
and th-
chief legal officer.
who came in 3 months and said, "Yeah, no, these books are fine," and was subsequently paid $250,000 to do so. So yeah, no, this is the picture of integrity and ethics here. Um, I cannot believe the stock is up on this.
Well, I think it's probably because it's heavily shorted. This
It
is
just doesn't
just
make any sense. Like, this is like a self-owned of a press release.
yeah, I don't know. I don't know. There's a lot of stuff moving around with Supermicrocomputer, and all I'll say is if it walks like a duck and quacks like a duck, it usually is a duck. There are tendencies among all of the shady companies out there, and the pattern matching is fairly easy. Now, sometimes the pattern matching is wrong, but I'd say 95% of the time it is right.
I think in 20 years, there'll be an announcement from their Twitter account that says, "We're back, can we talk?" And then they're gonna be launching a new token. They'll be pulling an Enron in 20 years.
We're going to be talking about Supermicrocomputer token. Yeah, yeah.
If all else fails, launch a token and sell out. That seems to be the corporate strategy these days.
Yeah, yeah, that is true. All right. Do we have any earnings this week, Ryan? We got about 10 minutes
Salesforce
left here.
Salesforce reported yesterday, and Mark Benioff said, let's see if I can find this exact
How's
quote.
my Einstein AI doing? Is he good? Is he in good spirits?
Oh gosh. Okay. I asked FinChat Copilot. I said, "Give me 5 optimistic quotes from this latest Salesforce conference call." First one says, "This is a bold leap into the future of work where AI agents with humans unite to transform all our customer interactions." Whatever.
That'll take a full I mean, that's gonna take a full ultra cluster to to compile all of the quotes.
All right. Number 5 here. This is the most excited I've ever been about the software industry. Mark Benioff. I would venture to bet he has said that 20 times in the last 25 years. He's
Yeah.
just like, he is perennially optimistic, which good for him. But there, you know what? Also, I think Matthew McConaughey is still an advisor to this company.
That's good. That's good. Yeah.
It's
He
yeah.
was in a commercial. I couldn't understand what the commercial was about, but it was a commercial and it was about Salesforce, and it did have Matthew McConaughey in it. So, I do know that.
What did I watch the other day that was the most pointless commercial for enterprise tech? It might have been SAP.
Yeah, yeah, or
It's just
ServiceNow.
so bad. Yeah, just like the most
The
arbitrary video.
Idris Elba in it for the ServiceNow one. I mean, the only
Yeah.
they're the worst commercials out here now though are the new Apple and Gemini ones. Talk to your phone. It's your new friend. It's like
Are you lonely?
talk to
Don't
your phone.
worry.
Are
Gemini
you
is here to quell all your loneliness.
are you terrible at your job? Have Apple write a summary and don't read it. Are we
Yeah.
crazy?
You know what is funny is these, you know how there's AI summaries on text now for Apple?
Yeah, who the hell needs that? What?
It's uh there have been so many funny memes like of people like getting broken up with over text or something and Apple's like doesn't see romantic spark, doesn't want to hang out with you anymore. It's like you're
Yeah,
just getting these
exactly.
AI
It's
summaries for them.
quite dystopian. But I'm looking at Salesforce's chart here, Ryan. We can make fun of Salesforce all day, but I mean, this revenue growth chart, 22% compounded from January 2015 to the last 12 months, $37 billion in revenue. This is it's kind of an undeniably great company.
Yeah. I mean, they were they're integral to a lot of businesses. And they have a lot of pricing power and a lot of it it's we've talked about switching costs before and how much of that has to do with time, investing time into switching. I think Salesforce is one of the biggest ones for this, where you've got so much of your data on Salesforce. You you really rely on them and use them on a day-to-day basis. The last thing you want to do is really switch and train everyone else to use another software. So, yeah, it does not surprise me that retention is quite high and they've become more profitable mostly because activists came in and said, get profitable or Benioff, you're
Yeah,
out.
I was gonna ask you, Ryan, when do you think the activists showed up? I'm sharing this chart here. Operating income basically was nothing until January of 2022, and now it's $7.5 billion.
Because they have to be. I know.
Yeah,
It's
exactly.
funny that if Benioff had it his way, there would be no growth there.
Yeah, they would spend 10,000, $25,000 on each employee for the annual retreat that they do. Salesforce sounds like one of the best
Dreamforce,
companies to work for. Yeah, Dreamforce, the big tower, flying people down to San Francisco for these company retreats.
I have heard they pay exceptionally well.
Yeah, yeah. Sounds like I said, I just said it. Sounds like a great company to work for. Now, could we double earnings if we got a little more efficient? Maybe, maybe. But I guess everyone's happy. Stocks up, earnings are up, employees are doing great. Benioff can hype up AI in the conference calls. He's in the zone again.
McConaughey's happy. It's yeah, all is good.
Yeah, those stock options are doing great.
It's
Um,
you know who else reported this morning? Chewy.
how are they doing?
I gotta say, I don't like this business at all.
Is it pets.com?
Fine. Maybe I don't remember really the pets.com model if they even had one, but the customers have like flatlined for 3 years. Like active customers have been 20 million for I want to say 12 quarters in a row now, roughly. But the spend per active customer continues to grow. It's just so much on discretionary items. It's not even on like the food. Like
Well, I mean,
just
all pet spending is discretionary, but
I just I think they consider food non-discretionary. But yes, I guess you could say it is all discretionary. They do say 80% of their sales come from auto ship customers, which is up like it was at 60% a couple years ago. But their profits, like their net margins are 0.1%. How do you do
yeah.
that when you know that 4/5 of your orders are going to be at the same time every year or every month? It's not like as much of a logistical challenge, I would
Yeah,
think.
it is interesting, and I don't have the revenue growth numbers in front of me, but it should be concerning if revenue growth is slowing down, that profits aren't showing up because you would have thought, oh, they're reinvesting in warehouses. I just think auto ship and sending a note on your dog's birthday can only go so far if Amazon has the efficiency and the spending and the faster shipping. It's going to be hard to compete.
Yeah. No, I don't love that business. Dollar or yeah, Dollar Tree reported and actually looked all right.
All right.
Comps are coming back up, especially at Family Dollar. Um, the value wars are on. It doesn't really surprise me that there's potentially some trade down here, I would imagine. Walmart obviously reported really strong comps a while ago. it seems like people are just consumer spending is tightening. We're seeing it through the restaurants and fast food, and we're definitely seeing it across the
Well,
retail stores.
the lower cohorts of incomes, dollar stores, fast food restaurants, the cheaper levels are definitely slowing down. Yeah, Dollar Tree might seem cheap. You know who covers these companies, Dollar General, Dollar Tree, that whole industry very well is the
I,
science of hitting, or excuse
Alex,
me, actually, it's not that name anymore. The TSOH Investing Research Service we have on quite a bit on the show. Maybe we need to bring back Alex on to talk dollar stores. That could be fun.
yeah, I would certainly be up for that. I mean, Dollar Tree, I think, has like 20,000 stores across the US. That might be, you know what? We're talking about stocks to hide in during a bubble.
Could be that, yeah. And they're counter cyclical, so
Yeah,
they do better when people trade down.
definitely.
Yeah. Wow. All right. Well, I think that's gonna do it. We're on the hour mark here. Ryan, anything else before we kick things out or end things?
Now we've got an awesome slate of interviews coming out. If you haven't already, Rihard Jark came on, talked everything meta. I would consider him. We've got our Latin American correspondent in Ian. We've got our meta correspondent slash expert in Rihard. And we also have a Sean Wang interview, which is going to be coming out, which I am particularly excited for. We had the discussion yesterday, and like I said, or like Brett said, he is an absolute expert. What else is on the docket? David
We're
Gardner episode?
Yeah, David Garner episode. We're gonna go through his investing style and how he's generated what I'd say probably 20% annualized returns over the last few decades. So you see that, he's one of the proven greats out there, and he did retire a couple of years ago. So we'll try to go through his philosophy. Interview on ASML coming. We have a research episode coming. We have 2024 recap and 2025 predictions. Lots of fun stuff. And before I close things out, if you like the show, if you enjoy it, if you open up that Spotify wrap today and saw that we were one of your top shows, give us a little review. 5 stars on either Spotify or Apple. It's the best way to help us grow.
Brett, I had a listener reach out this week and say, "Can we revisit the Berkshire versus Magnificent Seven
Oh,
bet from
yeah.
like what was it, 5 years ago now?"
Sure. Let's check it out. Yeah. No, it would have been Fang at the time.
It
So
was Fang. Okay,
yeah, if Nvidia was in there, it would have crushed it. But yeah, we'll definitely be doing that, I think, as an annual update for the 2024 predictions episode. But let's hit the disclosure. We are not financial advisors. Anything we say on the show is not formal advice or recommendation. Ryan, I, or any podcast guest may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, once again for tuning in, joining the live show, or listening wherever you get your podcasts. And we'll see you next week. Okay. Well, we're still uploading.